Okay. Hello and good afternoon, good evening, good morning, depending on where you are. And welcome to the LiveSquawk preview show. Today's show is previewing a bit of a review as well. We're looking at the initial reaction to yesterday's US election result, which was, can't put it any other way, but a landslide in favor of Donald Trump and the Republicans. It is now Donald Trump's Republican Party. And he has almost a free hand to do as he wants with the US economy and to leave a legacy of his own, really, in his last term as US president. So we'll look at that. I'm joined, and we'll also look at rate decisions from the FOMC and the Bank of England tomorrow, because we do have, for once in a while, for once in a long while, we've more. I guess the US elections were more dominant than the FOMC rate decision meeting. But we have a Bank of England rate decision. We have a number of rate decisions, really. The Norge Bank, so Scandi banks as well. Norge Bank, Risk Bank also due to report. But we'll concentrate and focus on, as I said, the FOMC and the Bank of England for tomorrow. I'm joined initially by Ryan Littlestone of Forex Analytics. He will go through and pass the election results and the upcoming rate announcements. If I'm a bit stuttery, it's because I was up last night covering the US elections and I've had about 3 hours sleep. So forgive me if I'm a little bit on the back foot, but it's important. We wanted to try and get some sort of reaction out. Hopefully we'll be joined by Joseph Troy, but that's my fault because I forgot to send him the link. So hopefully you can get the link and join us in time to give a North American perspective of last night's, as I said, monumental landslide for Donald Trump and the Republicans. The markets have played out as many would have thought, with a stronger dollar on the back of his win and his strength of his win. And we're seeing that follow through in the US markets today. What we will look at, though, is really what does this mean for the US economy? And I've got just the fiscal impact of that, and what we might see of a Trump win on the US economy, as played out by the Committee for Responsible Federal Budget. So we'll have a look at that as well and just look at their reaction. It was updated October 7th, but we'll have a quick look at what they expect will come through. But I think the markets have given their initial views on that. Pretty much. Just a couple of bits of housekeeping to do. For those new to who we are LiveSquawk. We are audio news feed, and we provide real-time news and updates for traders and brokers wanting to know what's happening and what's going on in the market in real time. Just a little disclaimer as well on that front, that nothing we do or say today should be taken as investment advice. We are simply giving you just an insight into what the markets are doing and how things are playing out, but it should not be taken as any kind of instruction to buy or sell shares. The content provided on this channel is for informational and educational purposes only. None of the information shared should be considered as financial, investment, or trading advice. So we got that out the way. I'm going to go to Ryan until we can get Joseph on board.
Afternoon, mate.
Ryan, how are you?
Yeah, all good, mate. All good. You sounded a bit tired going through the evening session.
I'm a little bit naffy. Yeah, you know what? It's yeah. I'm not young spring chicken anymore. So for me,
definitely not.
It takes a bit longer to recover, but it was lots of fun all the same, and I'm glad we sort of did it. I think there's a bit of feedback. I don't know if it's on me. Oh, hang on a second. Make sure there might be a little bit of feedback going on. So
yeah, I'll see if I can adjust some mind in case it's me.
No worries.
How's that?
Yeah, that's better. Actually, it's cool. A lot better. Right. So we'll get on with the initial election results. So for those living on another planet. Donald Trump won the US election, 2024 US election last night in a landslide, as I've mentioned. He has now, or the Republicans now have control of the Senate. The last I heard, they're up 2 seats in that, so they have majority in the Senate of 100 seats, and now they have the majority there. With more, I think there's still more vote counting to come. And in the House, which I think is a much more drawn out process, it could take longer, but I think the general impression is that they've also swept the House as well. Would you agree with that?
Yeah, very much so. It's looking like a clean sweep at the moment, which is, in one sense, is good for the markets because you don't want uncertainty. You don't want court cases and fighting over who's winning, and to get a good majority and actually become the winner is good for markets, because then markets can get on with with trading that side of things.
Oh, awesome. So in terms of that's a fairly good point. Do you see at the moment though, is the market getting carried away with this? Do you think this is taking it to its nth degree? I know it's the $1 million question, but how far do you think we'll go with this? Do you think because of what the absolute domination in what he's done that this is it's a long-term trade?
Yeah, I think we're obviously going to see stages. I mean, we got a good idea last weekend when we got that Iowa poll that showed Harris leading, and we saw a bit of an unwind of the Trump trade. That gave us a bit of insight into how much stock the market was putting into the election. So we knew what the effects was likely going to be if Trump did win. He has won. We saw the confirmation move, late in the US session over Asia and early in the European morning. And then the next big phase was obviously what the US were going to do with it when they came in. They've come in, the dollar's continued to strengthen. We've seen gold drop in, we've seen copper drop in, dollar's gone strengthening, yields have gone up. So we've got this reaction, but you've got to be careful because we're always going to get a reaction. This is the market in the mood now where it's got the election result, it needs to trade through that, and then it needs to take a look at, okay, what's really going to come in the future? Is Trump going to be as protectionist as he's been threatening? Is he going to go through with 200% tariffs on Mexico, or is he going to sit down and knock out a deal like he did last time? So I think there's a case to say that we could see a bit more extremism, if you like, in markets, because we know markets like to get extreme at the best of times. And then when we finally get to hear how these things are going to actually play out, that's when things are likely to settle down a bit.
Well, I think we looked at the peso yesterday. I mean, that dropped, I think, something like 3%. Obviously, there was that strength in the dollar anyway, but I think the peso got whacked hard on the back of that. Some of the emerging market currencies got hit a bit hard on that as well. And again, from the perspective of what I've read from bank research, the market reaction was expected in terms of the dollar strength that we saw, but just in terms of the implications for not monetary policy for one, but for the fiscal outlook. Some suggest that this could bring back an inflationary outlook for the US economy. I'm going to read you a bit. I'm going to try and share my screen as well. This is where the magic happens. If I can try and make this work. I'll share my screen. The US, so the US Budget Watch. This is a project of the Committee for Responsible Federal Budget, and basically they laid out their forecasts or predictions for both parties, whoever's to get in, and then they laid out several scenarios as to who they thought, depending on who came in. And so they've gone fiscal impacts of the budget. The next president will face significant fiscal challenges upon taking office, including record debt levels, large structural deficits, surging interest payments, and the looming insolvency of critical trust fund programs. It said our large and growing national debt threatens to slow economic growth, boost interest rates and payments, weaken national security, and constrain policy choices and increase the risk of an eventual fiscal crisis. So that's their view, and it was updated actually October the 28th. Excuse me. And if you can see my screen here, what they've done is they've got the fiscal impact of Harris and Trump campaign plans in its trillions from 2026 out to 2035. And so it just shows you where they look at debt and the central forecast for that and so forth. It says, really just goes on to just lay out, if we'll skip past the Harris plan because she absolutely got nowhere near the White House. In fact, she's got to clear out her stuff now. And you look towards the Trump plan. And I guess that is a fear that at some point we start looking at this in a midterm view from a fiscal perspective and just go, he wants to reflate, make America great again. It was his last slogan in his acceptance speech or his speech after the election polls came out. He kind of said as much. He wants to make the country great again. He wants to boost everything, and there are fears about protectionism and everything that might bring. So at some point, I think analysts will look at the longer picture and start to see this isn't this. You have to be a bit more circumspect about what we're looking at, what asset classes we're looking at in terms of stocks or whatever, and see how we get on. But it's going to be an interesting one on that front, and I think we'll have to wait. I think in the coming days, because the inauguration doesn't take place until January. I'm trying to go over the constitutional process. I think it's not till January anyway. We won't see any real enactment of what he wants to do moving forward. So that's the elections, and as I said, it's still playing out right now. We don't know the full effects of the House, or how much of a majority they'll get in the House, but that's going to be an interesting dynamic as well. I think I read or heard somewhere that although he's got the Senate, and that's great, it kind of gives him a bit of a boost in terms of pushing through his agenda. The House is a bit more hard to wrangle because obviously the numbers are so much more vast, and therefore he may not get it completely his own way on that front, and there'll be a lot more sort of horseplay that comes into play effectively on that front. So with that aside, if we move on to the FOMC interest rate decision and have a look at what impact it may have on monetary policy. As it stands right now, we're fully priced in for a 25 basis point cut from the central bank tomorrow. Do you see anything in the messaging that may, bring in a new diamond? I mean, they probably Powell won't want to mention the election, will he?
No, he's obviously probably going to pay it some lip service, probably along the lines of, we work with whoever government's in place at the time. Yeah. But he will try and steer clear of getting into any deep political discussion, though I expect the press are going to bombard him with questions anyway, as they want to do. If he mentions what's going to happen with fiscal numbers, then again, that will be him stepping into the political realm. So he'll steer clear of that. He's there to guide the economy for what the economy is doing right now. And right now, like you said, Trump wants to make America great again, but it's not running too badly at the moment. So growth is doing well. Okay, we had that little jobs wobble, but a lot of blame on the weather and strikes and things. So there isn't an awful lot for Powell to really comment on in terms of the economy. They want to get rates down. They can't have rates up this high for too long. Or it will become a drag on the economy. He laid the path out pretty clearly at the last meetings and press conferences since that they're going to cut for a total of 50 basis points for the rest of the year. 2 meetings, so 25 pips apiece. And then we have to wait and see what they're going to do next year and whether they're going to change the pace or anything like that. So on one hand, he's going to face a lot of pressure on the political side, but on the other hand, it should just be business as usual, cut 25 and move on. But if they don't cut, then that's gonna be a bit of a shock to the market if there's an inclination that it's politically led.
Well, on that front, there is. I mean, talk about that. There is a growing. It's all a minority, but people looking at or pulling back on a December cut. As you said, the economy was at 2.8%, was like 0.2 below forecast for the quarter, matching really more or less the speed of Q2. So on that front, we're not really seeing any kind of landing at all. It's still cruising along at a fairly steady pace. Inflation, yes, all right, it still remains sticky for those core services and whatever, but there's evidence that that's starting to abate a bit in terms of the level of inflation and cost price from that perspective. And also you look at, like you said, the jobs report. October's an anomaly. November's going to be an anomaly, I think, because you'll still have that washout, the two storms and the union action within that November report, if I read the reports rightly. So there's still a lot of noise around the jobs report, but it did, looking at some, and I think we discussed it in the sort of groups that we're in, that it was a little bit on the weak side, even if you extrapolate and take and factor in and adjust. It was still a little bit on the weak side. So maybe the Fed could latch onto that as a means to justify going again in December. Just to give you a bit but this is a Barclays preview piece here as well. It says, with moderate inflation, the labour market near full employment, and FOMC participants apparently viewing policy as restrictive, we expect the FOMC to cut rates by 25 basis points on Thursday and retain our baseline projection that FOMC will lower rates again in December by 25 basis points. But you see growing risks of a December pause, as I mentioned. They expect November statement to be little changed as well, and to mention that the committee remains confident that inflation is moving sustainably towards 2%, and judges that the risks to achieving its employment and inflation goals are roughly in balance. And then on the press conference, it says that they expect Powell to signal that more cuts will be coming, but the bank does not think it will provide specific guidance about timing and pace of future rate cuts. As a trader, someone who's still active in the markets, how do you approach tomorrow's FOMC, and what's your sort of tactics for trying to trade it?
That's the $1 million question, I think, and it's, for me, it's going to be tough, because if we're in the middle of this Trump trading, it's going to be hard to sort of trade the Fed while all this is going on. But at the end of the day, from a purely trading perspective, you've got to come back to the fundamentals. Yes, we're seeing a lot of moves today, and that will last for a few sessions as the market adjusts to the election. But you've got to come back to the fundamentals. So if I see anything that pushes markets to one of those extreme levels, like you say, maybe dollar MEX is pulling back. We know the Fed's going to continue cutting. So if the dollar is overly strong, per se, if yields rally too far, I keep an eye on 2-year yields, because the gap between 2-year yields and where the Fed's expected to take rates over the next 2 years, there's a big gap developing there, and those are the sort of anomalies I'm going to be looking at when you're just looking purely at the fundamentals and what the Fed's doing. But yeah, I think for trading it, we'll have to see where things are tomorrow, because it should be a boring meeting, and I'm not expecting any huge moves or surprises from that, so it should be business as usual. And as I said, the election moves that we're seeing now is probably going to overlay that.
Yeah, in my preview piece, I've said as much. And I think there's a Bank of America piece that said it's just set to fly under the radar, and that's what the Fed wants. It doesn't want to get in the way of any to be seen as any political instrument. So on that front, and just interesting though, I was talking to someone else who Trump isn't a massive fan of Powell, even though he was brought in under Powell's first tenure as president. And his tenure, Powell's tenure, is up in 2026, I think. It's going to be quite interesting to see whether Powell, number one, has the appetite to continue in the role, and whether Trump, in whatever power he can garner, forces him out and gets someone who's a bit more compliant to, I guess, the agenda. Obviously, and again, another disclaimer: the Fed is a wholly independent body, but it does get pressured by politicians. Warren, for one. Representative Warren has had a go. She's asked for the Fed to cut rates by 50 basis points. But again, and she's often called for for the Fed to do many things. I think they've generally turned a deaf ear to them.
Yeah.
But just to give a wider picture there. Talking of wider pictures, if we move on to the Bank of England then, which is also due out on Thursday, just to give you some timing. So you got the Riksbank in the morning. I've mentioned that. They're likely to cut by 50 basis points. That's at 8:30 GMT. It's 8:30 GMT, if I'm correct. I'm pretty sure I am. And then you've got Bank of England at midday, so 1200 GMT for the UK. And we're looking for a 25 basis point rate cut alongside an updated economic growth outlook from the monetary policy report. You got any views on the Bank of England? And again, the vote pattern, I think we're looking at 8-1 in favour of cuts by 25 basis points tomorrow.
Yeah, I'm wondering a bit if that 8-1 is maybe a bit strong. Maybe we see a 7-2, at worst case a 6-3, something like that, voting for a cut. It won't
think it could go to 6-3?
Sorry?
You think you might go to 6-3 even?
Oh, at worst case. I don't think it goes there, but I think maybe it's a 7-2, just to keep that objectivity in there, that it's not so straightforward. I don't think the votes are going to matter too much. I think what's going to matter is, obviously, we've had a new government here in the UK. We had the budget last week, which has gone down like a lead balloon in a lot of circles. So I'm going to wonder whether Bailey, he's not going to get into the political realm like the same as Powell won't, but he may start up some comments on what's happening with yields, because obviously the shadow of the trust moment is still fresh in the mind. So he might step more into what they might have to do if yields keep going higher, if it becomes a financial stability issue like it did last time. But I think they're going to cut 25. I think that's the right thing to do. And they're not in a rush. They're not in a rush like some of the other central banks. I can't see us stepping up to 50s unless we see the data falling off a cliff. So I think it's going to be a slow and steady approach. Again, what the market does with that going in, I'm not too sure. We've got pairs like Euro Sterling down on the lows. That's more of a dollar move today, because cable obviously moves faster than Euro dollar. But that will be, one of the key pairs to watch tomorrow over the BOE. And really, I wanted to ask you the same sort of question. Do you think they're going to get spooked by this move in UK yields and the fiscal stance? Because there's not a lot of growth forecast for all the tax rises that the government are putting in.
No, I mean, if you look at the updated forecast and Bank of America forecast for November NPR, they are now looking for 1.7% for this. This is fourth quarter on full quarter, 1.7 down from 2.1. For 2025, they've got 1.7. That's actually up from 0.9 initially. So they're looking for a bit more growth into the midterm horizon. What do I think? I think yield moves at the moment aren't of the same violent nature that we've seen, persistent violent nature that we saw with the trusts. Kwasi Kwarteng, if we get it in its right perspective, he was the Exchequer or finance minister. We were not seeing the same level of movement in yields. It's not uncontrolled. I do think, and I've read somewhere that analysts said, well, what do you expect? I mean, when the budget comes in, you should expect these kind of moves, especially with a new government and completely new policies to try and, I wouldn't say reinvigorate the economy. So I don't think there's the Bank of England is ready. Again, it's had recent practice in how to handle this situation. So I think there may be a question on it tomorrow. And if there is, he'll offer some reassurance that the bank has it in hand, whether it does or not. But from that perspective, I don't see the current situation as a reason to panic. I do think the market's a little bit disappointed. I think there's a little bit of readjustment going through, which is understandable. As I said, it's a new budget, new government, new Exchequer, Chancellor of the Exchequer. So that will make sense. As for December, again, I think you're right. I think they go with every monetary policy report. I've got this piece from Bank of America that says as much. He thinks they just think they go along the lines of quarterly or every quarter in terms of their cuts until something changes. So Bank of America, they actually go with you. They think 7.2 for a 25 basis point cut. They say guidance to show gradual meeting by meeting approach, and they say forecasts will show higher growth and inflation for next year and the year after to reflect the impact of fiscal easing measures. And we can't underestimate the fiscal loosening that's been brought in by Labour will have to play out. And I think, again, Bailey has said in the past that they work on the current situation. They can't forecast what's likely to happen, but they do have a blueprint now for what they expect, from the government in terms of fiscal plans, and so they should be looking on the back of that, or they will look on the back of that, in terms of, I guess, grading calibrating what they think they need to do in terms of interest rates. But I think tomorrow's going to be slightly more. I think it'd be slightly more interesting following the budget for the Bank of England than it would be for the Fed, because the Fed keeps its head below the parapet. But I don't expect any kind of major fireworks. I think on the vote thing, it'd be interesting to see how much unity there is, because we before the budget, we heard from Pill and we heard from Bailey, and we know there are two camps, and Bailey seems to be in the more dovish camp, really, in terms of rate cuts, and wanted to be a bit more dynamic, and Pill was pushing back on that in recent comments, and he's not alone, Pill, on that front. So I expect people will try, and if it's a dull affair, I expect people to try and weed out the disunity, if you like, within the Bank of England Monetary Policy Committee, to try and weed out something or other, some dimension to trade. But I don't really see any kind of fireworks, really. I think the forecast is the one to look for.
Yeah. I think going back to the vote front as well, we shouldn't rule out perhaps a 9-0. We know there's the main hawk man. If she decides that, okay, we're not there yet in terms of inflation, but it's the time for a cut, she could vote for it and go 9-0, and that might be something that the market sits up and pays attention to, maybe takes a real dovish tone about. But I think if that happens, it's probably going to be another extreme move to the downside for the quid. The market will get too dovish over that, because that will probably indicate that they will still be cautious going forward, and December may not be a done deal. So that's just another aspect to look at as traders. You look at whatever the risks are, whether it's a big chance or not.
Yeah, and as you're right, I mean, the weakness in the pound at the moment, exacerbated by the dollar strength as well. So a number of factors could play in that could tip it onto a technical front and take us through some maybe technical levels that just, again, speed and exacerbate the pound's weakness at the moment. And I totally agree. I just think any messaging that it's not going to be hurried into faster rate cuts, or it's not going to look at bigger rate cuts at the moment. Although I would say, you look at inflation, and it was at 1.7. It printed sub the target. I know we're looking for a small rebound, or it's a steady at that point. But I mean, if that runs too long below target, I do think the narrative will have to change a little bit, especially if we don't see the growth that the Labour think we're going to see. So the new government's looking for growth to do a lot of the hard work. I don't know where that's coming from. I know that analysts have put growth for, as I said, 1.7% for 2025. That's the 4 quarter on 4 quarter Bank of America forecast, for example. I don't know. I find that a little bit tough to see, unless the global growth situation decides to.
That might be another thing as well to look at, because obviously we've got the government forecasts of what they expect from this budget, and we'll see how that's going to tally up with the new BOE forecast, whether they've had to make an adjustment to that. But on the inflation front, we've still got, core CPI up at 3.2%. So that's their excuse as to why they can let headline run a bit soft, because that core still remains pretty high. I think unless we see a 2.5 handle on the core number, maybe even less, then that's the time when they might think about stepping up rate cuts, depending on where we are at that time.
Yeah, fair play. All right, listen, I think we've covered a hell of a lot of ground in the last sort of 30 minutes, and Thank you, Ryan, Forex Analytics, for taking part. Much appreciated. We will do. I will get my North American friends on to discuss the election results at some point. But I'd like to thank you for your participation and your wise words. And I'll put up some links to where people can find you and benefit from your wisdom and experience in the trading markets. As it is.
Yeah, always a pleasure, mate. And thanks for having me on. And good show, mate.
No, brilliant. Thank you very much. Cheers. Just to end then, so tomorrow we've got FOMC, 25 basis point cut expected from that to take the target range lower again. And then we're looking at Sweden's Riksbank. Again, they're looking at a 50 basis point cut. Norges Bank expected to keep rates on hold. Bank of England, we're looking for rates to be cut by 25 basis points as well. So a number of central banks out tomorrow, a lot of activity. Again, I think the US election tailwind will dominate still. So expect, again, more commentary from that. Now, Donald Trump, if nothing else, over the next 4 years, we are going to get a number of interesting headlines and a dynamic president. Compared to Biden, Rock's a bit more dynamic. But in terms of that, we've got our oldest president coming into office now in Trump, but he's no less exciting than he was in his last tenure. So it'd be interesting. If you want to catch the headlines, if you want to make sure you're ahead of what's happening in the markets there, if you trade, get in touch with us at LiveSquawk, take a trial, see what we can do, see if we can help you out as a trading tool. And have a good trading day.